Hello friend, welcome to this video Accounting Basics and Principles. In that I'm going to discuss evolution of accounting, introduction of accounting, basic definition of accounting, difference between bookkeeping and accounting equation, principles of accounting. So evolution of accounting, basically accounting is old as other subject. It was came into existence in 1494 uh, with the book of De Computisate Scriptures, which has wrote by Lucas F. Pacioli. That's why he has considered as father of accounting. And the book was published in Venice city of Italy. Basically, this book was related to mathematics, but there was one concept which is related to bookkeeping. That's why it had considered the first book of accounting. Now, let's move on the introduction of accounting. Accounting is the process of recording, classifying, summarizing, analyzing, and interpreting the financial transactions of a business to provide useful information for decision making. Basically, accounting records the all transactions of business and classifying them on the basis of certain rules and regulation, personal, real, nominal, and on the basis of one methods, double entry system to record on that basis in certain set of book and analyze those transactions by nature and interpreting the financial transactions of a business, and also helps to interpret the financial transactions, like at the end of year we get the financial statement and there are many dimensions need to be analyzed. So accounting provides those information which is helpful for analyzing and interpreting the financial transactions in different manners. And also it helps to stakeholder like owner, investors, managers, regulator understand the financial health of a business. Actually, at the end of year, we get the financial statement, and after getting that statement, we have to circulate these statements to owner, investors, managers, regulators, because they are the stakeholder of the company, stakeholders of the business, so that they must know about the condition of a business. So in that we have to show the everything like sales, purchase, assets condition. So accounting helps to find out the analysis as well as for taking decisions. I hope you understood the basic concept of accounting. It is worldwide accepted definition given by AICP, American Institute of Certified Public Accountants. This definition is saying accounting is the art of recording, classifying, summarizing in a significant manner and in terms of money transactions and events which are of a financial character and interpreting the result thereof. So why it is art? Because if you want to record the transactions of business, we must know the basic concept of accounting, how to record the transaction on the basis of debit and credit. So for that, we need to know first basic concept of debit and credit. Then after we would able to record the transaction. That's why it is called art of recording. And classifying. Classification is on the basis of different rules and regulation like debit and credit, personal, real, nominal. So in accounting, there are many different types of classification of account, bank account, salary account, wages account. There are many things. So we need to classify as per the accounting rules and summarize in the significant manner. If we record the transaction in detail way, we would not able to understand with all transactions. So we make it in summarized way and in significant manner, and the transaction which should have monetary value. Without having any monetary value of transaction, we won't record the transactions in the accounting book. And monetary transaction is basically the transaction which has its monetary value. Like if you are paying wages or salary, it should have the monetary value, otherwise it won't record in the accounting book. So whatever the transactions are taking place day to day, we need to record on the basis of their monetary value. Otherwise, we are not going to record in the accounting book. And the last thing is interpreting the result thereof. Interpreting the result thereof means whatever the transaction recorded entire year, we need to make a interpretation on the basis of record. So in different way, ratio analysis, cash flow statement, fund flow statement, and risk in the sales with the various other items. So it is the interpretation of the accounting. I hope this definition is perfect definition, and I hope you understand the definition of accounting. Now, this is the method to record the transaction, single entry system and double entry system. When we talk about single entry system, it consider only one aspect of transactions. Like, uh, if one example is there, a business purchase furniture for rupees 10,000 in cash. So usually, the single entry system will follow only cash or personal account, not both. So see the example, cash paid for furniture rupees 3,000. It considers only cash. But in case of double entry system, you will see one example is there. All transactions, every transaction has two-fold aspect, debit and credit. Like a business purchase furniture for 10,000 in cash, same entry is there, but the method is changed so that you will see there are two aspects, debit and credit, furniture account debited to cash account. So in that, one transaction is there, furniture purchase, but we have to follow the two things, debit and credit. So this is the difference between single entry system and double entry system. But India, almost organization, they are following double entry system. I hope you understood the things. Now, this is very important part of accounting. We must know basic accounting equation. Accounting equation means it is also based on the double entry system. Like I took one thing, liabilities plus capital is equal to assets. It is a part of balance sheet. When you will see in balance sheet, there are two things, assets and liabilities. So in liability side, we have to record two things, capital means equity capital, debt capital, and liabilities. Liability means payment to creditors, outstanding and short-term loans. So all these liabilities we have to mention in liability side, and in asset side. Basically, two types of assets are there: fixed assets and current assets. Fixed assets means land, building, plant, machinery, and current assets means cash in hand, cash at bank, debtors. These are the current assets. So if you will see, equation means basically the debit equal to credit. So whenever we talk about a normal equation, means left side is equal to right side. So when you will see the both side of balance sheet, you will get the same amount in asset side and same amount in liability side. So this means whatever capital we got from the different sources, we need to invest in different assets like land, building, plant and machineries, so that all liabilities equal to asset. So I hope it is clear now. The next point is principles of accounting. It is also very important for all accountants, all students to must know the principles of accounting. If we are not following the principles of accounting, it may create some errors in recording process. So we must know the accounting principles. So basically, accounting principles is a guideline or rules and regulation which provide us the proper structure, how to record the transaction and how to present its financial statement. So for that purpose, we must know about the principles of accounting, and it is a combination of two things, concept and conventions. Basically, accounting concepts are the rules, idea, notion which provide us a guideline to record the transactions of business. So every accountant, every student must know about the basic concept of accounting, and uh, these are the accounting main concepts: business entity concept, going concern concept, money measurement concept, accounting period concept, dual aspect concept, and accrual concept. Back to back, we have to discuss on these concepts. So first, business entity concept. When we talk about business entity concept, it educates there is the difference between owner and business. So means it is a it shows the owners is different from business. So there is a difference of owners and its business. Like I take one example of Reliance company. Reliance is separate from its owner. Reliance is separate entity and Mukesh Ambani is separate entity. So business entity concept tells us if any businessman is having any business, so it is separated from its ownership. So there are two different entity, like Mukesh Ambani is one entity and his business is one entity. So this concept tells us so there is a difference between owners and its business. And second one is going concern concept. Going concern concept is also known as ongoing concept. Ongoing concept means once you have started your business, you will never think your business will be shut down. Yani every business has its indefinite life. So indefinite life means once you have started your business, so you always consider your business will run long time. Basically, this concept is given for accountants. Accountants, if he knows that his business is going to shut down tomorrow, even though he will write all transaction in right way, he will follow the everything in same, follow the same rules and regulation. Like if he knows tomorrow business is closing down, so he will not convert profit into loss. Okay, so that concept always follows by all accountants, all businessmen, and also it must know for to student. Third one is money measurement concept. Basically, money measurement concept, when we talk about all and each and every transaction of a business, we need to record if it has monetary value. If any transaction is not having monetary value, we are not going to record in accounting book. So money measurement concept tells you record only those transactions which has monetary value. Suppose I have to pay some of amount for a salary. So if it is not having monetary value, we are not going to record in accounting book. Okay. The next one is accounting period concept. Whenever we start to record the transactions, if we are not defining, we are not confining the date of uh, date of closing, so we would not able to get the proper profit or loss. So for that purpose, accounting concept has given one period of transaction recording. There are two types of recording. First for financial year and second one is calendar year. If any business is maintaining calendar year, so he will start his business opening from 1st January and end with 31st December. And for financial year, it will start from 1st April and end with 31st March. That is accounting period concept. And the next one is dual aspect concept. Dual aspect concept is basically the concept in that all transaction, each and every transaction has two-fold aspect, debit and credit. That is dual aspect concept. Whenever you are going to record any transaction, you must follow the debit and credit rules. Otherwise, your concept will be break. And the last accrual concept. Accrual concept is also very important concept. It advocates that if you are writing any transactions in a business, so at that time, whenever it is happening, you won't ignore any transactions while it is happening. You have to store, you have to record at that time. That is called accrual concept. Suppose I sold goods today and we should record this transaction today only. That is called accrual concept. In the next video, we'll discuss the accounting convention. Thank you for watching.